Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Exclusive conversation with India's top PMS fund manager Devina Mehra. She tells Business Today TV how staying out of the market or booking excessive profit may not be the right strategy. RIL hits a 13-month high on news on Reliance Retail and Jio Financial Services. Helps the Sensex and Nifty end higher. Traders now looking at earnings season and CPI numbers for direction. BSE celebrates its 149th Foundation Day. Asia's oldest stock exchange unveils a new logo, gets ready to face new challenges. Securities Appellate Tribunal refuses to stay the SEBI order against Zee Entertainment Subhash Chandra and Puneet Goenka. The order had barred them from being directors in listed companies. Gives them 2 weeks to file their reply with SEBI. Modi government's big effort to ink free trade agreements before general elections next year. Commerce and Industry Minister Piyush Goyal in London to give a much-needed push to talks with the United Kingdom. Hyundai counters Tata's punch in the mini SUV market, launches the Extra priced at 6 lakh rupees, says it's planning a 20,000 crore EV play in India. Reliance Industries today rose over 4.5% to touch its highest level in 13 months during the session. The stock was up after news that the company's subsidiary Reliance Retail is set to buy shares from its non-promoter shareholders at 1,362 rupees apiece in a bid to reduce equity share capital. This also paves the way for its public issue and for Reliance Retail to become a 100% subsidiary of Reliance. The other big news on the counter was the announcement of 20th July as the record date for the demerger of Jio Financial Services. The announcement also helped power the Reliance stock, which closed nearly 4% higher at 2,735 rupees. My colleague Sakshi Batra spoke to Vineet Bolinjkar of Ventura Securities about the demerger and how it's likely to unlock value for RIL shareholders.
The stock of the day clearly on the Nifty at least is Reliance Industries. The shares are up over 4% today. They've hit 52-week high levels. Now, this is as a reaction as the company has announced its fixing of the record date for the demerger of the financial services arm. Now, as part of the plan, the Reliance Industries shareholders will get 1 share of Jio Financial for every 1 share that they hold of Reliance Industries. I wanted to ask you, what are you making of this Jio Financial Services business? How will it really play out? And what kind of value unlocking can it really lead to for the Reliance Industries shareholders?
So I believe that there will be concentrated approach to the Jio Financial business because it is no more part of the the Reliance entire conglomerate, and being listed separately, I think it will provide another stock in the financial services to the investors at large who have not been holders of Reliance, and that to my mind is expected to drive the outperformance of the stock. We expect the stock to do very well and consolidate gains as it goes ahead.
Right, you did say that the stock is expected to do well. Now remember, the stock is already up about 24% from its lowest level this year. That was hit on March 24th of around 2,200 and thereabout, and from that time a 24% surge already. How much more upside do you see on the Reliance Industries stock?
See, look at it this way. We've seen dearth of information coming from the Reliance tables on any corporate action. And with this is the first where Jio Financial Services is being, spawned out into a new baby. We will see multiple new disclosures coming in. So, Reliance Retail is there. The Jio IPO can come in. And, we could also see a lot of news flow on the green energy side. So I believe that the corporate actions will pick up frequency now, and that is expected to keep the stock firm and seek higher levels.
3,000, 3,100 levels. By when do you see Reliance Industries achieving these kind of levels?
So it could take a little more time than we expect, but difficult to put a finger on that. But I definitely think that it could happen by March itself.
2 days and 2 bumper debuts on D Street. It's really been quite something. Shares of Cyient DLM, the design-led manufacturing services arm of Cyient, saw a stellar debut today as the stock listed at a premium of 52% at 403 rupees on the NSE. Its issue price was 265 rupees. The stock gained a further 5.5% and hit an intraday high of 425 rupees. It closed at 421 rupees, giving investors a profit of 59%. Meanwhile, Idea Ford, which gave investors 93% listing gains on Friday, fell more than 10% today on profit booking. Equity markets ended higher after a choppy session. Indices climbed, led by strong gains in energy and metal stocks. The 30-share BSE Sensex was up 64 points and the Nifty was up about 24 points, settling at 19,356. Top gainers today: Reliance Industries, Tata Steel, JSW Steel, Bharti Airtel and HDFC Life. Top laggards: HCL Tech, Titan, Power Grid, TCS and HUL. India's top PMS fund manager Devina Mehra spoke to Business Today TV and discussed the way forward for Indian equities from record high levels. Her view was there's still a long runway ahead for Indian investors and that staying out or booking excessive profit may not be the right strategy at a time when things could get better still.
Thus, is the rally overdone or are we just starting?
Actually, in March, if you look at my Twitter feed, I had tweeted on March 28th that this was the perfect time to get into the markets, that I did not know whether it was the exact bottom, but it was certainly somewhere around the bottom. And also that, we all understand the risk of being in the market, but this was a time when the risk was more in not being invested and therefore missing out on an up move. So at that time, the index was in the 16,900 range, I mean the Nifty. Of course, it has had a run since then. But even so, my assessment still is that the risk is still of missing out on an up move relative to a crash. I do not see a risk of a crash very imminent. And I still think we are closer to the beginning rather than the end of the run-up.
For the first 6 months, which ended on June 30th, the two portfolios that Devina manages have outperformed both the Nifty as also by their peers very handsomely. So it's a 10.5% gain on First Global IS 50 in the past 6 months compared with the 6.5% index appreciation that you've seen, and the First Global IMAP, which has an overlay of a lot of gilt as well as gold, is still up 9.5%. Devina, as I was scrolling through your portfolio, amongst the top 10 odd stocks, you have 3 IT companies, of course 2 very well known, Infosys as well as TCS, and one mid-cap that has done wonders, which is Nucleus Software. Overall, the software sector hasn't done much. The index just up about 2% year to date. What do you think is going wrong? Do we have to wait much longer, or is the Indian software story now getting a little jaded?
Actually, Shell, the thing is this, that if you looked at it last year first half also IT did not do very well, IT services, and at that time the logic for it not doing well was supposed to be that the whole world is digitizing and there is so much demand for people with technology backgrounds that they will not get enough employees, the employees will be too expensive and therefore costs will go up and margins will get squeezed. This year, the story is supposed to be something the entirely opposite. If you go to the base of it, saying that there will not be demand. So, both cannot be true. So I think, this is a little overdone, because what had happened was that there was a slowdown in some of the Western economies. So what happens is that the orders you're supposed to get this quarter get pushed and may go on to the next quarter. But it is not as if that fundamentally something has gone totally wrong with the industry and it will never revive, because the whole move towards even non-technology companies becoming more digital, more technology oriented is not going to go away. So we are not super bullish on the sector, but we are still slightly overweight on the sector.
Okay, so let's presume that just as banks were out of favor a couple of years ago and now they are the toast of the town, we'll possibly see another fresh rally coming into software stocks. Coming back to banks, Devina, we've seen a cleanup of the entire public sector balance sheet. We've seen very high credit growth, and just as you rightly mentioned, when you look at quarterly numbers, the fourth quarter was really good for PSU banking space. Is this something new that is coming on your quant radar? Mathematically, how do you see these, 4 or 5 top PSU banking brands performing, given that you do a lot of quant-based analysis as well?
So actually, as I said, see, in 2020 and 21, we had very little banks, in fact, which was a big risk because the index has a big banking weightage. And banking is a sector where I'm always a nervous investor because you don't know where the bad things are hiding, where the negative surprises are hiding. But middle of 2022, roughly about a year ago, 11, 12 months ago, we changed our stance on banks, and part of it was what you mentioned, that credit growth is good, the NPA cycle was largely behind them, and also when interest rates go up, their margins go up in the beginning at least, because you reprice increase interest rates on the loans immediately, whereas interest rates on deposits increase much more slowly. So those were the factors, and also that the fact that they had been underperformers, that itself, once a sector
Absolutely.
or even a market which has been underperforming comes out of that, then you can expect a good run. And in 2020, banking was the only sector that was in the negative. In 2021, it was not in the negative, but I think the Nifty was up 22% and Bank Nifty was up only 11, so it did only half as much. So when it was coming out of that, we were clear that it would do better. Of course, we didn't take a big bet, but we did go to market weight or slightly above. We are somewhat above market weight now. And we continue to like the sector. We think it will continue to outperform at least for a while.
Watch the full exclusive conversation on our social media and YouTube channel, Business Today. The Securities and Appellate Tribunal refused to give relief to Zee Entertainment Chairman Emeritus Subhash Chandra and MD and CEO Puneet Goenka. The two had sought a stay on the SEBI interim order of 12th of June, which barred the duo from holding the position of a director or a key managerial personnel in any listed company or its subsidiary until further orders. SEBI had also directed Zee Entertainment to place the interim order before its board of directors within 7 days. In its interim order, SEBI held that Chandra and Goenka were prima facie responsible for siphoning of funds of Zee Entertainment to associate entities owned and controlled by them. The SAT, however, directed that market regulator appoint another whole-time member to consider the objections of the appellants to remove any kind of bias. SAT further said that the whole-time member is required to focus on the material evidence that is on record and should not import information which is in his personal knowledge. The Modi government is pulling out all stops to ensure free trade deals with several countries before general elections next year. Commerce and Industry Minister Piyush Goyal today left for the UK for a 3-day visit to review the progress on the much-anticipated trade deal. Talks are also on to seal the deal on at least 2 other agreements in the next few months.
The recent camaraderie between the Prime Minister of India and United Kingdom in Hiroshima, Japan, hid the fact that the two countries have not been able to sign a free trade deal even after 2 years of hectic negotiations. A 10th round of talks was held last month after a temporary pause following the attack on the Indian High Commission in London by Khalistani elements in March. The attacks and the seeming inaction by UK authorities had led to speculations of derailment in the talks. But with Commerce and Industry Minister Piyush Goyal in London for high-level talks, hope is afloat that the much-anticipated free trade agreement will be in place by year-end.
The 2030 roadmap that was agreed by our Prime Ministers back in May 2021 is both a vision but also a practical plan to transform the relationship between the United Kingdom and India. It will bring the relationship even closer together and immense benefits for both countries, not least mutual prosperity. And we have committed to doubling trade between our two great nations. But our ambition is greater still. The United Kingdom and India have global interests and global reach. We are science and technology superpowers.
The Modi government is looking at inking free trade agreements not only with the UK but also with Canada and 4 European countries, Iceland, Liechtenstein, Norway and Switzerland, which fall under a single bloc, the European Free Trade Association. According to reports, efforts is being made to ensure the deals are in place before the government machinery enters election mode early next year. Talks are also underway with Israel, New Zealand and Bangladesh for free trade agreements. What FTAs promise to the industry are much lower tariff rates and open access, which makes the Indian manufacturer competitive in the global market. They also make technology more accessible as well as ensure a uniformity in policy. The increased focus on FTAs has in fact helped raise Indian exports 14% in 2022-23 to 770 billion. What still remains a concern though is the negative balance of trade with ASEAN and Japan despite the rise in exports. A rise in exports has been accompanied with a rise in imports, with the Indian market also being opened up for foreign goods. However, the general consensus is that the benefits far outweigh the drawbacks for now. Bureau Report, Business Today Television.
In a huge victory for Desi capital markets, India has emerged the top choice for foreign investors. According to the Invesco Global Sovereign Asset Management Study, India is now the #1 emerging market to invest in. This is what the report says of 85 sovereign wealth funds and 57 central banks, representing a total of $21 trillion in assets. The report says that India overtook China as the most attractive global target for sovereign investment in emerging markets. According to the report, India is being viewed increasingly positively for its improved business and political stability, favorable demographics, regulatory initiatives, and a friendly environment for sovereign investors. The report adds that among emerging markets, India has piqued sovereign investors' interest, overtaking China. Now, while India has, for the past few months, taken a leadership position with its presidency of the G20, renowned economist and Columbia University Professor Arvind Panagria believes that the government needs to enforce a few reforms in tax and labor laws to truly capitalize on the opportunity. Here's an excerpt from his conversation with BTTV's Akanksha Chaturvedi.
Okay, so, once again, what we are, the particular aspect of demography that I see is the working age population. This is going to grow much bigger in India. Between now, between say 2021 to 2040, we are going to add about 150 million working age individuals. And these are the individuals we need to nurture. Good education. Clearly, our higher education system needs a lot of reforming. Hardly any reforms have actually happened because we are still being governed by the 1956 Act, the University Grants Commission Act. That certainly needs to be reformed in a number of different ways.
The whole demographic dividend can be utilized when the labor is skilled, the labor is, and that one way to that is through manufacturing. And India, and like you said, many people are expressing interest in India as an investment opportunity. We have G20, many corporate and global leaders coming in and expressing their interest in India. What reforms do you think from the policy end can make India more lucrative to investments or more lucrative to manufacturers to establish their hub in India, maybe move away from China, like what China did in the early 2010s or late 2000s? How do you think that India can tap onto that opportunity?
Yeah. So again, this is all about improving the ecosystem. One of the very important things that we need to do is ensure, give the potential investors a very stable tax regime. Our taxmen or taxwomen have the habit of, spring surprises at businesses. There is this enormous propensity to, find ways to raise more and more tax revenue. But when you do that, you scare away the businessmen. It is all fine to raise taxes, but the tax system should be very clear, transparent, so that when the business comes in and sees that, okay, these are the taxes I will owe, those are precisely the taxes that they end up owing, rather than being surprised by the tax departments knocking on their doors for taxes that were not clearly laid out in the system, or that the businesses did not anticipate while coming in and all. So that's one aspect. Infrastructure, which we are doing very well. I think, you know, there's been fantastic expansion of infrastructure, and that's something that we need to continue to do.
Bajaj Auto seems to have hit the pot of gold with its new co-branded bikes with Triumph. And the two bikes, the Speed 400 and the Scrambler 400, have garnered more than 10,000 bookings within 10 days of their global reveal, which is on the 27th of June. While the Speed 400 has been priced at 2.33 lakh rupees and will be available by the end of this month, the Scrambler 400 will be available in October, and its price will be announced closer to the launch. Bajaj Auto was up 1.3% and hit its lifetime high of 4,951 rupees in trade today. Hyundai has launched its mini SUV to take on the likes of Tata Punch, Renault Kiger and the Nissan Magnite, and the Exter is also very competitively priced as well in that category. In an interview with Business Today, Tarun Garg, the Chief Operating Officer at Hyundai Motor India, said the company had identified a void in the entry-level SUV market and is determined to capitalize on it. Furthermore, he stated that Hyundai is actively engaged in developing a wide range of electric vehicles and has allocated 20,000 crore rupees in Tamil Nadu for this purpose.
As you know, India is all about SUVs now. 46% of the market is SUVs, and Hyundai has, if I may say that, set the trend, and today for 55% of our contribution is SUVs. At the same time, we realized that there was a gap in the portfolio, the entry SUV segment, which is now about 10 to 11,000 a month. And we believe very strongly that this benchmark product from Hyundai today, Exter, whether it is in terms of design, space, safety, 6 airbags as standard means the benchmark has been raised. Of course, it has a sunroof, it has 60 connected features, fuel efficiency, AMT, CNG, it has everything. I believe very strongly this segment is going to really see a big change with the Exter coming in, and probably this model will become a game changer in the Indian auto industry.
So what volumes are you targeting with the Exter? You already have a set of 12 cars that are actually, 3 to 4 of them are actually ruling the segment. Now with the Exter coming, what volumes are you anticipating?
So if you see this segment, probably it is about 10,000 a month. I believe very strongly in a year's time, probably we can look at maybe doubling of this segment, 20,000, maybe more. So we like to see how much really we can go. More importantly, like I said, we believe very strongly that this will cut across segments. So not only we're expecting people from the SUV, but also from the hatches, and also not only the first timers, but maybe a second car for the family as well. I think this is going to be a game changer for Hyundai.
Right. Also, sir, if I come to the CNG part of the Exter, is there a plan to roll out that as well?
Yeah, immediately. In fact, CNG is already out, and you can go to the showroom and see a manual, see a AMT, and see a CNG as well.
Right, sir. Also, coming to the electric vehicle mobility, Ioniq 5 and Ioniq 6 are truly iconic when it comes to your EV portfolio. Nearly 60% sales are coming from that. What's the plan for expansion further in EV market? Because, Ioniq 5, Ioniq 6 are a little expensive for the Aam Aadmi segment, but yes, are you planning to come towards the lower side for EVs as well, sir?
So look, you mentioned yourself that probably Ioniq 5 is more for the niche market. As you know that we have invested 20,000 crores in Tamil Nadu over the next 10 years, very strategic investment, and basically it's all about trying to localize whatever we can in terms of battery. And once that is done, I'm sure you will see more and more products from the Hyundai stable in the electric vehicle space as well.
Right. Also, sir, a record-breaking performance for the month of June, over 50,000 units, one unit over 50,000 units being sold. 4 to 5% average growth you are maintaining, sir. What volumes are you anticipating for the months to come and the outlook on the sector?
I think the HVC H1, we are one of the very few big volume manufacturers who have seen a double-digit growth. In fact, more than 10% growth in H1. So market looks good so far. The response to all our products is good. In fact, Creta, where so much competition has come in, has seen a 22% growth. Like already mentioned, Verna has doubled the volumes. The Tucson is the market leader. And now that Exter has come in, going, I'm sure things are looking very, very positive. Of course, we are cognizant of the interest rates going up and those global news, you know, about not so good news about some parts of the world, maybe recession. But India still looks very, very strong, and we are very, very optimistic that the momentum could be carried in H2 as well.
That's where we leave it on the show tonight. Thanks so much for watching.